Good morning, everyone. The consumer space in India continues to demonstrate sustained growth with strong fundamentals across demographics and macroeconomic factors. In fact, in terms of GDP, we as India will add another India to ourselves in the next decade. E-commerce in India has reached roughly USD 50 billion last year, and we expect it to obviously grow extremely fast and reach almost $150 billion in the next 3 to 4 years. The pandemic further reset this baseline and has brought new shoppers online who are different from the existing online shoppers. And therefore, we believe that the next vectors of growth for e-commerce in India will be very different. It's going to be completely new consumers. It's going to be potentially older people, more women, more tier 2, tier 3 rural consumers, as well as lower income people are expected to now come online and really drive the next wave of growth. But what's also very important to think about is which categories are going to drive growth. Will it continue to be electronics, mobile, that's driven growth in the past? Or will we now see growth also in beauty, in personal care, in food, in FMCG, which have historically been underpenetrated? At the same time, to service the demands and the needs of these new consumers, new commerce models are evolving. We're seeing assisted commerce, conversational commerce, live commerce, video commerce, influencers. There's just so much happening in this space right now. And with all this action, of course, the entire D2C or consumer tech space has grown by leaps and bounds. We now have multiple unicorns. There's been a lot of deal flows in the last many years. And we're all, of course, gathered here to really understand and demystify the e-commerce space and celebrate some of the digital native leaders in the country. But in doing so, we can't do it without the backdrop of what will really drive this e-commerce growth. Will it be digital infrastructure? Will it be payments? Will it be logistics, supply chain, workforce? What's going to happen? And what we have here today is an illustrious panel of people who are going to talk about all of these topics with you. So let me actually get the ball rolling. I'm not going to hog the mic anymore. Let me get the ball rolling. So maybe, Arpan, I'll start with you.
Sure. Hi. Good
So Arpan, you built one of the largest vertical marketplaces in India. And obviously in a competitive category like fashion. And you've been a part of that journey now for a while. What do you believe gave Ajio an edge above the horizontal marketplaces, whether it's Amazon or Flipkart, or amongst the other vertical fashion-focused marketplaces? And what are you continuously doing to maintain that edge?
Hi, good afternoon, everyone. I think Ajio has been one of the pioneers in fashion e-commerce in India for the last 7 to 8 years since our inception. I think 3 things that has really resulted in Ajio's growth. The first would be tech. Out of all the folks over here, if you go to the Ajio app right now, there are 3 different storefronts you'll find based on your previous buying behavior. So personalization and tech, that's something we really push. The second thing I would say is content. From a content point of view, the reason I want to highlight on content specifically, or marketing, because I'm a marketer, slight bias, I would say the reason would be, if you look at the duopolies in the market right now, be it Amazon or Flipkart, be it Ajio or Myntra, be it Zomato or Swiggy, the issue is not overall awareness. The issue is top of the mind. The issue is consideration. The moment you decide that you want to buy some food or you want to buy a piece of fashion, right? We want to be the first brand, the default brand to be there. And marketer plays a very, very important role to bridge that gap, to own that mind space, to own that positioning. So I think content is something which we have really worked hard on, and we are pushing that further through influencers, through the kind of celebs we work with, or through the participation we have had in the recent future with, say, Supersonic or a Backstreet Boys or someone as popular as Ranveer Alabadia to target the YouTube base. The third thing I think what has really worked well for Agio is exclusivity. Now, Agio is a part of Reliance, and we have brands like Balenciaga, brands like Diesel exclusive with us. So that has kind of helped us drive traffic to our platform, exclusive in the online space I meant. Also, the push for house of brands. We want to be seen as house of brands with over 5,500 brands in our portfolio, almost 100 plus of them, primarily the luxury ones. Other ones which are exclusively on us, that really helps us build that imagery for the brand as well. So I would say these are the three things which has really helped Agio be where it is today.
Thanks, Arpan. So personalization, content, exclusivity. Let me shift gears a little bit to Mr. Bala, to you.
Hi.
You know, Big Basket is, of course, one of the most formidable e-grocers in the country. It's also one of the few e-grocers globally which is on the path to profitability. And of course, you've now expanded into quick commerce with your BB Now offering as well. There's always this question that quick commerce can never be profitable. How can it be profitable? So would really love to understand from you, how do you think about growth and profitability for quick commerce in the Indian context?
Yeah, I think this has been the hot subject, I would say, for the last at least 1.5 years. The good news is that it is very much profitable. Right? We can make it profitable. You know, as we speak, the last 3 months, some 10 of our stores have already become contribution margin positive. Right? Now that gives us a lot of confidence that we can really get into this journey and make it really meaningful. And what has been helpful for us is also the strong learning that we have got from the other line of business that we have been running quite profitably for the last so many years. So that has given a deeper understanding of the unit economics. So that we have been able to bake into this particular space. However, I also have to be practical and pragmatic to say that it's not going to be as easy as it was in the other business line. One of the things we have quickly learned is that you need to be very careful in terms of defining your processes to make sure that you take up what you can chew, which means that's one of the reasons why after a lot of research, we said that we will go in for 15 to 30 minutes. Because we realized that pushing yourself hard to 10 minutes and all is going to put that much of higher strain on your systems to make it really work. That's the first part. The second part is that I think your processes and technology have to really work together to really idiot-proof your processes as much as possible so that you do it right the first time. And use technology, be it routing, be it picking, so that you're able to really shave off every second possible from a wastage or rework point of view. Once you do that, I think we can make it work. The business is growing, and because my colleague also mentioned, customers are also evolving, right? We are very clearly finding a new segment that is adopting to this service, largely the millennials, so who get into impulsive purchase. Therefore, the good news that has happened is that market has started expanding. The online grocery market, the customer segments have started expanding. However, there are some customers, including my own household, shifting from the traditional buying to this because they find convenience here. The last point here is that one thing is very clear, quick commerce will be a premium service. So therefore, there will be a premium pricing and customers will have to pay a little bit of a premium for availing this service because, I think by and large customers understand. If you have to get something in 15, 20 minutes, it takes an extra effort by the service provider and therefore you won't mind probably bearing a part of the incremental cost. So when all these things work together, I'm very sure this market will grow substantially with more and more customers, including in tier 2 cities where we are already observing good offtake of this particular model. And overall, our own goal is that when we exit March 24, at a business level, we should be contribution margin positive on this. And I would strongly believe that we are very much on course for that.
Fantastic. That's actually very, very great to hear. And there clearly seems to exist a playbook that at least you've now figured out for profitability in quick commerce. Let me pivot to Rajat. Rajat, as an investor, you have a front row seat to see some of the newest models of commerce in India. I'm sure you see this day in, day out of your life, social commerce, live commerce, group buying, influencers, The list is endless. Which new models, in your view, truly actually have the potential to take off in India? And what will it take for them to succeed from an ecosystem perspective?
So Parul, in my mind, actually there's a lot to be done in the traditional models itself. And just given where capital markets are and at what point in time we are in the cycle, I think the biggest focus for the next few years is going to be on just profitability. And hence, whichever model you pick needs to have enough margin, enough capital efficiency to get to profitability. And that's why I'm saying the most important thing to do at this point in time for traditional business or existing companies as well as newer companies is to find models that are unit economics positive and good capital efficiency. So in that context, I think the two most important things to get right are actually private brands in my mind, or exclusivity in different shapes of form where you can actually get good margins or some reason for the customer to come to shop with you, and omni-channel. So most traditional brands or existing brands, existing vertical marketplaces, we can leave aside the horizontal marketplaces for now, but at least the vertical marketplaces, pick a category and everybody will have to go offline and drive better economics and better growth. Similarly with private brands. We are seeing that in our portfolio, we are seeing that in our other companies in the market as well, and that's likely what's going to happen. But if you look at more futuristic views, I think what I'm personally very excited about is anything to do with assisted shopping. It does mimic the way traditional shopping was done or is being done in tier 2 India, and even in tier 1 India, or with, like if you look at even today, if I'm trying to buy a phone, the first thing I'll do is ask a friend, right, what's a good phone to buy. So that kind of shopping behavior has to mimic to the typical e-commerce as well, and already the horizontal marketplaces are trying some of that. More of that will happen, and it has a full spectrum in my mind, whether it's influencer commerce at the very basic level to even AI-assisted commerce at the very futuristic level, which I think more people are experimenting, and over time you will see some of that play out as well. Last thing I will add, there will always be interesting new categories that will keep coming up. Wherever there is some product innovation that happens, either in the actual product that's being sold or in the buying experience, new companies will get created. We are quite excited about the home space in general. I think as India is becoming richer, that classic roti kapda makan argument plays out, and people will spend more in their own homes. So we will see more companies that get created over there. Similarly, we're actually quite excited about sports. It actually baffles me that one of the largest sports companies in India is a French company which is buying stuff from China and selling in India. So why is there no Indian company that's been able to do that? So we're looking, and we'll hopefully invest in the next few quarters.
Thanks, Rajat. That's a great segue, actually, for my next question to Harsh. Harsh, Rajat obviously talked about omni-channel in the context of digital-first brands then going offline. In your context, you've actually been a part of a journey with Spencer's and with Nature's Basket, which has taken its physical assets and then gone online, and then created a very strong omni-channel and hyper-local model in that micro market. Omni-channel, of course, if I step back, has been a buzzword in retail globally for 2 decades now. Everyone's talked about omni-channel. Do you think true omni-channel is now a reality in India?
Sure. I think before I go ahead to answer that question, I generally start by saying that, what's a hard job to do in the world? Yeah, I think it's important to set the context. At least half the people in the audience will agree, keeping your wife happy is a hard job to do. Do we agree? Right? At least 2 people in this panel are in grocery, so we can say we have got the hardest job to do because the fruits are not fresh, the vegetables are not kept neatly on the aisle, and everybody has got an opinion. Plus, it is the most consumer-centric business that it could be. Putting that into context, right, of omnichannel, what I believe truly is there are 2 consumer behaviors that have fundamentally hit us in last 3 years, and that's a semi-permanent change of kinds. As consumers, we've been truly homebound, which essentially meant that the way we adjusted and the way we evolved managing work and home, being homebound, I think one of the biggest players and levers in decision making became convenience, which essentially means, of course, disruption in payments, deeper financial inclusion, and disruption of last mile delivery also. And that hit players in terms of both, whether you are physical brick and mortar or you're a pure play online, to basically make you think that you have to operate at the cusp of both. So more than omnichannel, essentially, to me, it's more saying that 5 years down the line, the brands that will really thrive are the brands that would remain truly phygital. The ability of a brand to operate at the cusp of physical and digital. And to put that into context, a few learnings. When the pandemic really hit and we looked at how difficult it is for a large part of consumer cohorts to shop, especially like senior citizens, would they be really comfortable shopping on apps? And guys who've done it, it's really not easy. It takes sometimes 14, 20 minutes to just make your cart, and you can't do your monthly shopping. And incremental innovations like allowing senior citizens, specifically targeted, and everybody for that matter, to order messaging just at over WhatsApp, and converting that into a normal order and getting it shipped in 2 hours at your home. Incremental innovations over conversational commerce, incremental innovations towards last mile delivery, whether it is quick commerce. I think if we look into omnichannel and the future of omnichannel, uh, the idea essentially is that brands no longer have a chance to choose to operate in either of the worlds. Whether you look at it in terms of efficiencies, whether you look at it in terms of retaining your customers and being true to your offering of convenience, authenticity and trust, however you want to put it, uh, solving for experience and convenience at the same time is something that's really imperative, and brands will continue to go ahead and solve that.
Thanks. Thanks, Harsh. Actually, none of this, none of what the rest of us have been talking about, Tanya, would have been enabled without the entire backbone of digital payments in our country. You know, payments in India has clearly leapfrogged most developed countries in the world. UPI as a word didn't even exist in our vocabulary, you know, a few years ago, right? So how has payments for e-commerce evolved, and where is India today on that journey?
Thanks, Parul, for the question. So I think payments and commerce, of course, go hand in hand, right? And I would like to believe that payments are the enablers for the growth that you've seen in commerce as well. I mean, take 4 or 5 years ago when I was working in a bank where the most important aspect for my clients who were retail store owners was to manage cash collections. It was probably 40 to 50% of the work that we as bankers used to facilitate in transaction banking. That number itself has changed to maybe it's still there, it's still about 10% or so, but it's still drastically reduced. I mean, today you're talking about a storefront where, and there are, by the way, 200 million storefronts today who accept digital QR as a form of payment. And that's truly been the proliferation of payments in every nook and corner of the country. So yeah, I mean, in terms of e-commerce and commerce in general, payments have enabled the growth of commerce. And one of the big reasons which you touched upon was UPI. And UPI itself today has more than 900 billion transactions that get processed on a monthly basis. The reason for that is, of course, the fact that it is an extremely simplified process, whether it is getting yourself onboarded, whether it is about doing the checkout itself on terminals, or whether it's doing it at e-commerce storefronts. All of this has been made possible because the payment itself has been simplified. Having said which, I think e-commerce itself has gone through a dramatic set of changes pre and post pandemic, and that, again, the numbers are out there for us to see. Online versus offline itself has skewed in favor of online, with 60% commerce transactions now being done online. So I think a lot of these macroeconomic factors, the fact that payments itself has become so simplified, and the fact that so many new e-commerce formats have emerged from just a few marketplaces that were in existence a few years ago to now I mean, any kind of D2C brand who wants to go online can set up a store in a span of few minutes, can set up payments instantly, can get a simplified checkout experience, can get customer information, and all of this has been possible thanks to so many e-commerce enablers, that have been that are now present in the country. So I think this is where payments plays a very important role, because it's our job to make sure that customers who get enabled or onboarded onto e-commerce platforms have the right set of payment options. I would also like to talk a little bit about credit cards in general, and I think somebody did touch upon the fact that there has been so much of spends that have happened in the last 1 year, owing to maybe even rewards, owing to loyalty, cashback, and that in itself has also led to a tremendous increase in e-commerce spends. Uh, whether that is, whether that is sustainable or not is another question, but I do feel that it's still, the tip of the iceberg. We still have to get to solving for credit for many, many millions of consumers. And we need to expand the power shoppers from just 10 million that exist today to maybe even 10x or 100x of that number. So I think that's where a lot of payments effort and companies like us who are working towards getting more folks under the credit pie or getting more folks to just go online. That's where I think, we'll be. Thank you.
Fantastic. Thanks, Tanya. Let me, go back to Bala. There's this, in your business especially, workforce is critical, both quantity as well as quality on the ground. Your workforce is primarily the reason for you delivering on your customers' expectations and the promised SLAs. They are critical in terms of being an important cog in your entire logistics and supply chain. And they may or may not also become the reason why you are able to expand or not to multiple markets, even go to tier 2, tier 3 towns, and so on and so forth. I'm sure you see this is your daily, day-to-day life of how to manage this really large workforce. So can you tell us a little bit more about how this has actually enabled the growth of Big Basket?
Yeah, absolutely right. Today, wherever we are is only because of our frontline workforce. We internally call them as G2 workforce. We have G1, which is G2, because we hate calling them as blue-collar workforce. Right? So we internally, sort of nomenclatured them as G1 and G2. And G2 is a very large chunk of workforce. As we speak, we have close to 40,000 employees who are our frontline workforce. And predominantly, either they are in the warehouses or they are delivering the last mile deliveries. There's a big growth. And there are also several others who are doing housekeeping and all. But these two form the biggest chunk of it. Now, long back we realized that if you have to succeed, we have to take care of this. I must tell you that the journey has not been smooth at all. We have had our own share of challenges. In fact, we continue to have. Suddenly something happens in one pocket, on one particular geography. You find people living in exodus, right? Then we need to have. Therefore, one of the things we had realized was that we must create process capability to be able to continuously ensure supply. Because no matter how much hard work you put in, you will have to live with attrition. In fact, if we can restrict our annualized attrition of the G2 workforce to about 100, 120%, we'll be very happy. Right? And what we need to do is create capability to be able to manage the supply from recruitment, from other channels that we have, and also provide in-house opportunity for people to grow. Now, I'm also pleased to tell you that last count when I did was that we have had almost about 5,000 people who had joined in as G2 workforce have got promoted into G1, including a very few of them becoming store managers over the last 7-8 years. Because they're very far and few, as you would expect, but it has happened. So I think, it is your ability to hire people, it's your ability to retain at least the key chunk of them and make sure that have a very good supply mechanism that you put in place. Now in that process, I think you need to be innovative also, because the cities are drying up, right, in terms of this manpower. Either they are drying up or there are not people who are willing to come and do this work. So I think we need to also carefully expand into the tier 3, tier 4 kind of cities, try and bring people in. And obviously, there's always this fear for them to come in and live in metro cities. So encourage them by giving them housing accommodation, right? Setting up dormitories for them, providing them subsidized food all 3 times during the day. By doing a variety of such work, we are able to really manage the scale and continue to, get more and more people enrolled. But my own feeling is that no, this challenge will continue, and we need to maintain like this because a lot of companies are adopting to online. Therefore, the demand for the G2 workforce is really increasing, and we need to be keeping that in mind to be able to continuously create supply capability. And once you do that, and if you retain the attrition at about 8% per month, I think you must be doing a good job with respect to whatever you set out to do.
That's a fairly lofty ambition, 8% attrition per month. Great. Harsh, question for you. The retail model in India has, and I'm not talking about e-grocery right now, but even simply offline retail has been fraught with profitability challenges and has had several ups and downs in terms of growth as well. What are the key drivers of this, and how will this play out over the next 3 years?
I think we're undergoing two changes. And if you look at the last decade of the retail evolution, right? We've seen new models come in, right from the growth of classifieds to growth of e-commerce. We've of late seen the growth of D2C and also quick commerce. In every adoption cycle, with the, as you scale up, essentially profitability is the biggest question at hand, which essentially you presume that at certain scale you will get that. But that's not just the story of the online ones. Even in offline, we've had a similar but a diagonally opposite problem of saying fundamentally you have a problem of not being able to scale up. But as we're converging, I think we are playing on three big levers as I see. One is the aggregation at the marketplace MSME level. With financial inclusion coming in, players who are aggregating marketplace owners like physical traditional retailers, bringing them on board, solving right from their discoverability to their access to larger markets, also giving them a stack to become more efficient in terms of their operations and also in terms of their consumer offering. That's a layer that's building up. And it's not just India. If you look at that kind of a meta layer, which aggregates MSME players and brings in efficiency in offline and solves fundamentally for scale up, has done greatly well in markets in South Asia, including Indonesia, etc. Right? That is one. Second, essentially, in the offline markets, beyond the scalability problem, one of the fundamental things is access on supply chain, both backward and front end. The access to last mile delivery to traditional offline players is getting much better than we were 5 or 6 years before. Players right from delivery to ShipRocket, etc. And you can have a full range there. But the access to last mile delivery and access to serve across 28,000 pin codes in the country is a stack that is being solved with much better level of efficiencies. Of course, it does not help in solving the unit economics when you are solving it at a hyper-local or hyper-commerce, quick commerce kind of a segment. That unit economics still needs to be solved. But having said that, that part of the stack is being solved. In terms of sourcing also, there's another play that is happening and it's accelerating gradually very fast. The Udans of the world and more such, Jumbo Tails of the world and more such players essentially looking forward to solve for B2B supply chain is another big lever that's playing in. So as I see it in the long term, in a convergence scenario, the capability of online brands and offline brands, which essentially was differentiated by the ability to scale up, the ability to have access to larger markets, the ability to drive efficiencies, will have a big equalizer. And one of the fundamental things that I really believe in, and if I look back in the history of retail in the country, offline businesses have been the only ones which have been truly, truly profitable. I haven't heard of a kirana that's plays in offline that's run by an entrepreneur that doesn't make money. So, of course, he was never scalable, right? And that's what the entire stack is going to solve for that. But solving for profitability and growth, which remains the big question, right from the investor side to people who are solving it, the solution essentially is getting the right model offline, and leveraging the stacks that we have at hand, and of course, in a true omni-channel fashion, see it play out where the biggest elephant gets addressed, which is saying sustained profitability.
Thanks, Harsh. Rajat, the next question's for you. India has the distinction of having built a very strong digital stack of public goods. So, of course, starting with Aadhaar, UPI, DigiLocker, and now ONDC. How do you think this digital public stack has enabled the growth of e-commerce so far? And how is this going to evolve going forward in your view?
We should be very thankful to the government and iSpirit and all the good people who were responsible for building this. Clearly, it's been one of the biggest accelerants, whether it's payments or KYC for the financial services world, which has enabled credit, which again fuels commerce. I think all of us have benefited as consumers, as investors, as companies. I think it will just, by a passage of time, it will accelerate even further. So if you look at today, India, people who are on the internet, probably 700-800 million people. People who use digital payments is in the 300-350 million zone, but people who shop online are 150-200 million, that range. So as just over time, right, this gap will start, the 300-350 million digital payments will go to 500-600. Similarly, people who shop online will automatically just by passage of time and as the country becomes more richer. I think to me, the single most important trend line here is we've always talked about India's growing middle class. It's finally growing. And it's finally becoming relevant from a purchasing power perspective. So hence it's just a matter of time for me. All the other initiatives around ONDC, etc., I think they are very interesting enablers. Remains to be seen, how it, what's the real value prop that comes out of it. A lot of it is today fueled by discounts. What happens when discounts go away? What happens to real consumer experience? What happens to grievance redressal? So some of those things need to be figured out. I think it's easier done in sectors such as, say, mobility, where the service is actually very standard, right? You're booking a cab to go from A to B. So there it's relatively easy. What happens when it is in grocery? What happens when it is in product commerce? That still remains to be seen. Those are much more complex categories. But for sure, it seems out of all the things that have come out of the iSpirit stable and so on, that one seems to be the most promising in the last few years after all the UPI and DigiLocker and all.
Thanks, Rajat. Arpan, question to you. What are the top 3 actions that will drive the next wave of growth in Indian e-commerce? And specifically, talking about the next set of consumers. So what we all popularly call the Bharat consumers. So what is really going to drive growth there?
I think at Ajio as well, we have seen tremendous growth from tier 2 and 3 markets, which contributes to over 40% of our current revenues. What will drive growth in these markets? I think first is providing value for whatever they are paying for. There was a perception earlier for bottom of the pyramid or folks in tier 2 and 3 markets, they'll want to buy cheap. I think that's no longer the perception. We at Ajio, I'm trying to sell Ajio a bit here as well. We at Ajio have the top brands. Also, we have Reliance Trends, which is a part of the ecosystem. So we push Trends products in these markets, and it does beautifully well for us to acquire new customers from these markets. I think the second is, thanks to Tanya, a UPI push in these markets where customers seem relatively safe. They perceive UPI to be safer compared to a credit card or a debit card where they have to share their data. The third, I think, is, and I don't think that has been solved for yet, and we are also struggling internally, is cost of customer acquisition, which is a huge challenge when it comes to reaching out to these folks because they're extremely spread out. So if we can really solve for that through all the partners like Google and Facebook and otherwise, I think these are the 3 things that will lead to growth in these markets further in the near future.
Thanks, Arpan. So Tanya, your perspectives on how payments will contribute to the growth of e-commerce? Just taking a lead from Arpan on this.
No, I think, as I said, payments are going to be enablers to growing e-commerce. So how do I make sure that customers who are coming to the page or going offline or going online have the capability to complete the sale? How do I make sure that I'm able to obtain information and not ask for information again and again? So a lot of us, for example, have created some sort of a checkout where you don't need to re-enter, customer information. You don't need to re-enter card data. It just sort of simplifies the entire checkout process. And I think that is one big enabler because it's going to be faster for the customers. The reason why, today many of us choose a particular website is because you've already had an experience with them and you don't wish to enter your card data or your customer information or your billing address again. So companies would solve for that problem. And I do know that a lot of D2C firms therefore are looking for enablers like that so that even if they are first-time consumers, you're able to obtain that information at the time of checkout and complete the transaction faster. The next piece, of course, is making sure that you have every single type of payment option available. UPI, of course, being the obvious choice because it is a given now that almost every customer with a bank account would have a VPA linked to it. And as long as you have that, you can actually go ahead and transact and complete the sale. The third piece, which I briefly touched upon, was access to credit. Depending on the type of industry and what type of sale is occurring at the time of checkout, how do you make sure that you're able to offer simplified credit, you're able to offer credit at point of sale or online in the most seamless manner possible? And a lot of good work that companies are doing by building products on top of India stack. Account aggregator is one big enabler where I believe companies can underwrite much faster than what they were doing. And I think that is another big enabler. It's not just, as I said, about putting forward reward points and putting forward cashbacks. Of course, that helps you get customers. But in order to solve for the long tail of customers who are still not yet savvy shoppers, this would be one big fillip to it.
Thanks for sharing your perspectives, Tanya. We're now going to change the format a bit. So we're going to do a quick rapid fire round with the panelists. I must say the questions have not been shared, so we will see some hopefully very impromptu responses. So I'm just going to start from Rajat, from you, and we'll go down. So 3 questions per panelist, and you have to be very quick. You'll get about 10 to 15 seconds per response. First question for you. 1 word each to describe the past, present, and future of Indian e-commerce.
Growth, stability, and profitability.
Well said, just like a true investor. Your favorite digital native company as a consumer, and cannot be one of your investee companies.
Can I say none? I would say Lenskart. I think it's a perfect example of tech and omni-channel. Love the products.
The one business model innovation that you will bet your money on, literally, to unlock the next wave of growth.
Assisted shopping.
Tanya, 1 word each to describe the past, present, and future of Indian e-commerce.
I'll go with more than 1 word, okay. Past would be maybe like a one-size-fits-all. Present would be more contextual, personalized. And future would be open for all and just grow the pie beyond what it is today.
Great. I love the phrases. Your favorite digital native company as a consumer.
So I'll talk from a payment standpoint, right? Because I spend a lot on grocery and on food delivery. And I think the experience that I see on Swiggy as a repeat user is really unparalleled. And it truly is one click, once you've stored all the, your customer information. So
And the one business model innovation that you will bet your money on.
So I think any product that is leveraging the India stack, whether it's account aggregator, insights built on top of that, I just feel like the opportunity, the TAM associated with it is huge and companies need to tap onto that. UPI on credit, for example, I do feel that it's another opportunity sitting in for startups to start building on top of it. And yeah, look at AA to build credit insights to underwrite better.
Great, very insightful. Arpan, one word each to describe the past, present, and future of Indian e-commerce.
I think past would be Blitzkrieg because of the atomic growth of e-commerce. If I have to use one word, it will be Oppenheimer. Uh, Present would be all about consolidation in terms of manpower, in terms of uh, the supply chain, in terms of valuation. And future would be, I would say, profitability and optimism. It's more Barbie. Yeah,
Your favorite digital native as a consumer.
same as Tanya, but for reasons beyond. I think Swiggy, told about Swiggy, right? Okay. I think Swiggy has really beautifully solved a problem which was out there. Not just solving a problem, but going beyond. If you look at their communication, extremely insightful. As a marketer, I love how they, and so much to learn from them. Their app experience and their delivery experience. Even the smallest nuances which they have in Instamart, the pack, and otherwise, I think it's holistically has done a fantastic job in capturing the market and the mind share. Pitted against someone's as big as Zomato, they have still held their ground.
And the one business model innovation that you will bet your money on.
I think it will be curated commerce. Given that I'm in fashion, we have seen the growth of several curated commerce platforms in the recent past. Beokoof is one of them, which is targeting Gen Zs. Urban Monkey, again Gen Z. Yoga Bar, which is targeting health-conscious folks. The Whole Truth is doing so well. So I would say instead of spraying and praying and trying to get everyone, it's more curated commerce targeting a very specific niche is going to the future of commerce.
Great. Harsh, one
Uh,
word each to describe the past, present, and future.
Sure. I think solving for scale up, 1 to 100 for the guys building in. For investors, it was still 0 to 1. Second, essentially solving for experience. Again, 1 to 10 from a investor standpoint. And of course, future would be the cliche profitability, but I would rather say open ecosystem. Think beyond e-commerce, think meta, think larger ecosystem. There's no fun just solving for shopping and transactional commerce. Blend in a couple of industries to really get the best unit economics from wherever you can borrow it from.
Your favorite digital native company as a consumer.
My favorite digital native is, I truly believe we have done a lot less as a startup ecosystem or as a business ecosystem, solving for micro, small, and medium enterprises in the country, the 61 odd million. We believe financial inclusion has happened, but that's happened on the consumer side because we believe we have the freedom to pay. But I don't see that. I don't see the freedom from a MSME standpoint. The millions of kiranas do not get money on their working capital needs every single day they want. That is the true financial inclusion for me, saying that how easy that credit is available to the 61 million MSMEs. And hence, from that standpoint, right now somebody I believe who's doing great in digital native is IndMoney. ET Money is equally close, but IndMoney is a superior product relatively or incrementally just because of the experience and the kind of incremental innovations they put in solving the financial stack on a consumer side. One thing that I would want to bet my money on is, of course, one of the biggest micro lending solutions in the country, which solves for what the banks are not being able to solve, which solves for what the NBFC is not for able to solve, and actually brings in a newer financial innovation in the country in terms of a financial structure itself, and allows one-click money to a pawn shop or a kirana shop at any point in time he needs, and the ability to make that really, really sustainable. I think that's something that I would really, really want to solve for.
Thanks, Harsh. Pala sir, one word to describe the past, present, and future.
Raw analogy from cricket. I think past was like test cricket. It required a lot of hard work, preparation, technique, and all that stuff. I think the current is more like, I would say, a mixture of one day and T20. Future is going to be more of T20 and T10. A lot of excitement, and a lot of fun and a lot of challenges as well.
Great. Your favorite digital native company as a consumer, and you can't say Big Basket.
I think I've been an admirer of Uber, Ola type of services. I think they've revolutionized the way we are transported from place to place. I mean, today we can go to a place without having to bother about having your own transport. It's been really good. I think some of the features that they've been also able to offer continuously is good, even though the current, there's a bit of a challenge on supply demand, but in terms of the use case, I think they've been very good at it.
And final question of the panel, the one business model innovation you will bet your money on.
I really thought hard on that. I know it will be probably a biased answer. I think I'll still bet on things like Tata Neo, because I maybe have some inside information which I can't reveal. I think I'll definitely bet on that because
Fantastic.
very ambitious plans.
Thank you. Thank you to all of our panelists for sharing their deep perspectives and insights. I certainly learned a lot. I'm sure you did too.